Welcome to the channel. Today we'll take a look at this bifurcated market. Why is it bifurcated? Because different indices are doing different things. Some are stronger, some are weaker. That's why we need to take a look at all the major US indices to get the big picture. Okay, so this video is for educational purposes only, and it is not a financial advice. Today the video is going to be a little bit longer, and if you stick around till the end, there is a bonus announcement which I will do. So if you can stick around this longer video, that would be really appreciated. So what we are looking at is the cash index of Dow Jones Industrial. It's really no longer industrial. There are different kind of stocks in there, so I think ideally we should call it Dow 30. So what we're looking at is this index is trading above the 200-day moving average, also the 38.2% retracement level. We were anticipating that perhaps it was going to do this ABCD pattern, but actually what we look at is a much stronger market. So there is at the moment quite a lot of bearishness, at least in the YouTube sphere, but actually we have a bullish bias to the stock market at least till sometime in April, and then we'll have to assess based on the data and the price action. So that's our stance with a bullish bias, but however based on the price action we'll evaluate and we can always change our stance. Okay, so what we're looking at was that perhaps there's a bit of a retracement going on, and it could go to the 38.2% retracement level. However, what we see is that actually the market is stronger. This is the 200-day simple period moving average, and the fact that it wasn't even able to retrace down to this level of 322, which is the 38.2% Fibonacci retracement level. The stock market, this market is actually quite strong. And let's take a look at where this support came in, right at the 78.6% retracement level. So there is still a lot of work that needs to be done, but this price action looks quite positive. So in the coming few weeks, we'll see most likely the price will move in the up direction. We'll also take a look at the YMs. So the YM is painting a little bit different picture. We can see that it already made the 38.2% retracement level. I'm not sure if it's gonna do this ABCD pattern, so I'll just remove it. The support came right at the 78.6% retracement level, just like in the cash market. And what we are most likely what the market is likely to do is an ABCD pattern, at least on the daily chart, and we are looking at 34,670 as the short-term target in the YM. Now we are going to take a look at the ES. So just something about the how we analyze these markets. We're always looking at the Dow Jones cash market for our analysis. We also look at the YM, but cash market is our primary market for Dow Jones. For S&P 500, we look at the ES-Mini contract. For the Nasdaq, we look at the NQ. We also take a look at the QQQ because there is a lot of trading in the ETFs. And also for the small caps, we take a look at the futures contract for Russell 2000 and also IWM, and at times IWN, which is the value ETF for Russell 2000. Now that out of the way, so this is the one which we were looking at in more detail last week. In fact, we had forecasted the resistance level and also the support level for this market, and in fact the market rotated back right into this support zone where it found good support last Friday, and the market bounced up. I'm also going to show you an intraday pattern which personally I was watching, but that was also that could have been a bearish pattern, but it was negated. And where the price close is right above the 200-day simple moving average, which is pretty good. And what we are looking at is at least on the daily chart, we are looking at this ABCD pattern. So at least in shorter term, 4150 is the kind of the target, given that this support level which we mentioned around 3880 remains intact. Also, this 3900 level was just not a level which I picked up. It was actually a level derived from statistical analysis, and that is what my bonus announcement is going to be right towards the end of the video. If you can stick around, that'll be really appreciated. Okay, so just on the intraday basis, taking a look at this market, let's say on the 60-minute. So what we were watching was for this 39.50 level around here as a potential resistance, which is around here, 39.50. It was an ABCD pattern plus a 38.2% retracement level. In strong trending markets, a 38.2% retracement level acts really well. Since it was taken out, it means that the bearish momentum is actually dying, and that's pretty good for the bulls. Okay, now taking a look at this market on longer term weekly basis, what we are looking at is this longer term ABCD. Let me just mark it for you. So this is the 1-to-1 projection, A, B, C, and D. So what we're looking at is 44.50 potential. Let me just make it small cap as the potential target because of the ABCD. What we also notice is that this is right in between the 61.8% and 78.6% resistance level, and it could act as a pretty strong resistance if the price, as we are expecting, should get there. Okay, so that's what we are looking at in the ES. Let's take a look at NQs. Okay, so one thing to notice about NQs on the daily chart is that it is still trading below the 200-day simple moving average. So compared to in Dow Jones Industrial Average and also the ES, this market is actually much weaker. As we had forecasted, the market found resistance from the 61.8% retracement level. It went right into the support level, which we had forecasted. The price is trading above the 20-day simple moving average, which is positive from a short-term momentum perspective. And what looks like is that this market is going into a ABCD pattern. So what is good is that it found support. Like Friday was pretty strong day, so a lot of buying came into this really weak market. So the tech sector seems to be improving, and once it turns higher from this 38.2% retracement level, then we could have a pretty fast move to the upside. And given that it was from this level, that's pretty bullish for the market. So what we are looking at is perhaps there's going to be some sort of resistance around the 200-day moving average, around 12,000 mark. But ultimately, I think because of this ABCD, we are looking at 12,300 as the next potential levels. Let's take a look at on the longer term weekly. So just like the ES, what we are looking at is a longer term ABCD pattern. Yeah, so 12,580 or 12,600 roughly on the weekly. And then let's see if we've got any key ratios around there. And there you go. So yeah, 12,500. That's the kind of place where there could be pretty strong resistance for this market. And then this entire zone of about 500 point range, 12,500 to 13,000. Let's just write potential resistance zone and make it smaller. 12. Okay, so that's what we are watching here in the NQs. Let's also take a look at the QQQ. Okay, again, similar kind of pattern. What is nice to see is that these round bottoms coming in. So let me try drawing some sort of a round bottom here. Curve like this here, and then also here. So that's nice to see. And similar to NQ, it looks like we are in this ABCD pattern. We'll find some resistance around the 295, and this longer term ABCD can take us to around 303, and that would be an interesting level to watch just in the NQs. Let me just quickly see if there is some expansion here. And yeah, so 306, 307 is just gonna be 1.272 expansion, so that's gonna be roughly the range for these QQQs. Okay, then let's take a look at the Russell futures contract. So the Russell one is actually very interesting, as we had discussed before, that small caps, they were the first ones to get hit, and now they seems to be recovering. We seem to have some sort of, although it is debatable how good this, if it is indeed a inverse head and shoulder pattern, but we don't really follow that pattern that much here. What we had a look at is that we mentioned in our last video that it found resistance here, and it was not able to take out this in this resistance zone, which is just a double top, now a triple top. What is good is that the price is actually trading above the 200-day simple moving average, but on the daily basis the 20 period simple moving average did not close above the 200 yet, but it's getting close. Also in this pullback, we had forecasted to watch 1845 level, which is the 38.2% retracement level. Last Friday, the price seems to have found good support here, and there's a pretty good looking bullish candle. So what we could anticipate is that perhaps the price is moving in this ABCD manner, and we are looking at about 1998, even potentially, this top could be in question. Let's also have a quick look at if there are some expansions. Well, that's not going to be valid because this took these out. And also it's going to be very close to the 78.6. Oh no, not even that. So that it looks like a pretty nice looking chart at the moment. On a weekly basis, yeah, so again on the weekly basis, it's gonna, the ABCD we are looking at is, yeah, it's going around 20, near these what do you say, let's put this here as resistance to watch level, around potentially a double top. We'll have to see how the price will trade when it gets there. Okay, so we will also take a look at the IWM. Oops, sorry, this is not the one that we were looking for. Okay, so there we go. Similar kind of pattern here. What we are looking at is, quickly we do this, and here. So the ABCD will take us to about 197, 198. We have some resistance on 194 because the 78.6% retracement level. Good thing to see is that just like the futures contract, it found support at 38.2% retracement level, and also just it closed above the 200-day period moving average. So that's all positive. We are also going to look at the IWN, which is the value. So iShares Russell 2000 value ETF, because in this cycle the value stocks have performed much better, at least compared to the tech stocks. And in the small caps, it's good to see how the small caps are behaving when it comes to value. And what we can see is that just like the IWM, we believe that the price is actually moving in this ABCD structure. So getting towards these highs here as potential resistance to watch. So there we go. So we have looked at the markets. We looked at the Dow Jones index cash market. We also took a look at the YM, the futures. We also took a look at the ES-Emini futures contract, then the NQs and also the QQQ. Also the small cap Russell 2000 futures contract and IWM ETF. So for the period, although there seems to be some negative news around us, but we think that at least till sometime late March, April time this year, 2023, there's a positive momentum in the market, and we have a bullish stance in the market. That might not resonate with some of the things which we are hearing, although we remain flexible, because in our trading we don't trade. We like to trade the market, not our opinion. If the price action suggests that, and some of the resistance levels which we watch and the key patterns which we watch, we can always reassess things and change the stance. But our stance for now is actually markets, equity markets moving to the upside. Also, there is a talk about the Federal Reserve's meeting coming up for the decision on the rate, Fed funds rate. That is going to be in the first week of February. Again, we don't know what is going to happen, but if the Fed is going to do a 25 basis point rate hike, in our opinion, that is going to signal a Fed which is a little bit dovish, and that could be positive for the markets. If it is going to be 50 basis point, that could mean that okay, maybe that's Fed still pretty hawkish, and we'll have to see how the markets will trade, and it could mean that there could be quite a lot of volatility. Speaking of volatility, so that's the bonus part. I am actually looking to do a video in which I am going to talk about volatility and the VIX index, and how we can take a look at the VIX index. We'll have a look at how this VIX index is actually uh, calculated, not in too much mathematical details, but just by looking at its pure definition, which is posted on the website of the people who own the index, and how to use this VIX index option pricing and convert that data into standard deviation figures, which we can use in our weekly, monthly, weekly, even daily trading. So essentially, I will break down and produce a formula and show in the video how we can actually come up with standard deviation levels, which the option traders watch, which is one of their key things to watch, and how we can actually decompose the information which we are getting from the VIX index, and we can decompose it and bring it down into the weekly time frame and daily time frame, and have the standard deviation levels available to us, and which we can use in our trading plan. Because the US equity markets, ES-Emini as an example, these are mean reverting indices, and with the rise of trading in options market, it's very important to actually understand certain key concepts like standard deviation, and how we can use that information to be able to come up with quite specific, very specific levels to watch, and see, and also combine that with the kind of analysis, technical analysis, which we do with Fibonacci and the ABCD patterns, to come up with a kind of a plan or an edge, where we can have a look at where potential reversals could perhaps take place in the market. So that's gonna be this. That was my bonus announcement, and I'm working on that video. I don't know how long it'll take me, but I'm trying to produce that quite soon for you guys. If you like our analysis and how we look at the markets, then please do subscribe to the channel, because it's really important for me. That way I know that okay, people actually like my work, and then I'm motivated to bring in more and more videos and keep on doing this analysis and bringing out this information for you guys. So please do subscribe to the channel. Thank you very much for watching the video. It's been a little bit longer video than usual. I really appreciate, especially if you stuck around till the end. Thank you very much, and good luck and good trading. Bye.